from Montgomery County Department of Environmental Protection, and it is my pleasure to welcome you today to our session on no, it's not, it's a social situation, hopefully, but this session is actually on solar financing. And we have Tom Deo from the Montgomery County Green Bank who's going to be presenting about it. But before we start, I just want to remind everyone that we are right now in the middle of our 4th solar co-op, and this year we've actually included EV charging as well. EV is electric vehicle charging. So if you don't know about that, please stick around because Kimberly Armstrong from Solar United Neighbors will be talking more about that at the end. And we have more info sessions happening too. So you can find out all this information. I know Emily's gonna put it in the chat box. But for anything related to Montgomery County, you can always go to mygreenmontgomery.org, and everything you could ever want is going to be on that homepage. Really, right on that homepage, it says join the 4th co-op. So you just go there and you can find out about all the info sessions that are happening. And then if you have additional questions about energy or about renewable energy in general, you would go to our website, montgomeryenergyconnection.org, and all of your energy questions can be answered there. So those are 2 resources for you. I'm going to turn it over to the rest of the crew to introduce themselves. We have 2 folks from Solar United Neighbors, and then Tom is going to present about solar financing. So Emily, take it away.
Hey y'all, I'm Emily Stever. I'm with Solar United Neighbors. We are a national nonprofit that helps people go solar and fight for their energy rights.
Hi, I'm Kimberly Armstrong, the Maryland Program Director for Solar United Neighbors, and I am here to help you navigate going through the co-op in Montgomery County. Like Larissa said, this is the 4th co-op, so I'll be assisting members in the co-op.
And I guess that leaves me. Hi, I'm Tom Deo. I'm CEO of the Montgomery County Green Bank, and I appreciate the chance that Solar United Neighbors and Department of Environmental Protection gave us to sort of provide a briefing on what does it look like to finance solar. As you all hopefully are participating in the Solar County Co-op program, and I think about how you take this on and either and finance it. So I'll walk through a number of slides. I assume everybody's got it now. If they're on the Zoom, they can see the slides. So I'll just walk through this and introduce the Montgomery County Green Bank shortly, and then walk through some factors you need to think about as you go through financing. So I can advance it myself. Yeah, okay. So for those who might not be familiar, the Montgomery County Green Bank is actually, we're a nonprofit. We were chartered by Montgomery County back in 2015 with a mission to increase investment in the county for both residents and businesses and energy efficiency and renewable energy. But we do that not as a bank, but as what one might call a financial investment enterprise. We take the investment that the county gave us, which at this point is a little over 20 million, and we look for gaps in the market where the private capital is not participating, and find ways to use our money to bring in more of their capital into the market. So basically a leverage where we take our 20 million and we're trying to create over 100 million of capital of investment in the county. So we've spent our time looking for where those gaps exist. We're not trying to remove private capital, we're trying to bring more private capital in. We take away some of the market risk for the lenders so they feel a little more comfortable, and therefore bring more of their money into the market. We've done a few products. We've got a commercial program out there, and just this February we launched a residential one, and we'll get to that at the end of this. And that product does support solar energy financing for homeowners. So we've got products out there to serve both commercial businesses and homeowners. But in this one, we're just going to talk about what we're doing with the homeowner side. So I'm going to start by just sort of laying out some of the basic things you need to think about relative to what solar panels on your roof and what the financing implications that come with those. Clearly, you're already thinking about the environmental benefits you get from this, right? You're bringing in solar power, and therefore you're not drawing energy from the grid for what that power produces, and you're reducing your carbon footprint, which is hugely important and positive for what the county is trying to achieve to get to zero emissions by 20 30. So participating in solar in the county is helping yourself, your household, as well as the county achieve that very ambitious goal. But there's a few factors you need to think about. One is, what's the size of the array that they're going to put on your house? That's designated in kilowatts, and that's what the installer is going to tell you the size of the system that can fit. I've got an example in here, so hopefully it'll illuminate better as we go into the example so you can see what that means. But it's the amount of DC generated power that's going to come off of the solar array. So that's in kilowatts. But the factor that you want to concern yourself most about is, what does that turn out in kilowatt hours? When you get your utility bill, you'll always see on it two factors. There's a generation factor, which is, what the cost of power to generate is, and that's expressed as a rate, call it 9 cents, times the kilowatt hours that you use. So every time you're turning on a light and you're drawing power into your house, you're generating kilowatt hours of usage. So your utility bill is always going to tell you, okay, here's what generation cost times kilowatt hours equals a price you're paying. And then there's a part of the bill which is called the distribution charges, which is the power lines that come to the house and so forth. And Pepco is going to charge you a price for that generation. They've got to keep up the lines, and all that costs money, and that's also paid by kilowatt hours. So those two factors on your bill factor into the price you pay. So the kilowatt hours you draw times those prices is a major part of your bill. There's a small part of the bill which are just administrative fees that don't have kilowatt hours associated, but anything that has a kilowatt hour associated with it, your solar PV is going to be an offset to that. Then another factor is the arrays do degrade over time. Very small, 0.5% a year, but over a 25-year period, you'll see that degradation happen. And so the kilowatt hour that you might get in year 1 is going to look a lot different when you get to year 25. Still a strong generation, but less than the power generation in year 1. So over time, you get a little less kilowatt hour credit on your bill. And then the last thing you have to understand is the modules themselves need some level of maintenance. They don't need a lot. If you get a hailstorm, they may be damaged, so you have to have insurance to be able to cover that. There are warranties on them, and whenever you're talking to your installer, you want to find out what warranty the panels have, so you know what basic coverage you get from the manufacturer. And then there's a thing called the inverter. And the inverter is what converts the generation from the array, which is a DC power, to AC power, which is what we all use in our home. And so it's a box. It's next to where your fuse box will be. They'll put an inverter there, and that could last 10 years, could last 15 years, but generally over a 25 to 30 year period, you're going to have to replace that one time, and so that's a cost to the system as well. So those are the basic components to think about when you're financing solar. So then, how do you think about, okay, what are the cost factors or benefit factors that I get from a solar array? So the first thing is, what's it going to cost to put this up? When you get an installer coming out, they will tell you specifically for your solar array what is the cost it's going to be. Largely, it's communicated in a cost per watt. So if you put up a 7 kilowatt array, that's 7,000 watts. If it costs about $3 to do that, that's about $21,000 to install that array. So there's a system cost. And that, when they give you that price, it's pretty much all in. The labor, the cost of the panel, the inverter, all that needs to be done. So you got a cost to the array. But then you got to look at what benefits you get. So the first benefit you get is, for all the solar generation that the panels create, you're drawing less from Pepco's grid. So you're bringing in that free solar generation, as it were, through the DC panel, and you're not pulling any of that from the grid. So you got a benefit there. That comes to you in the terms of a credit on your utility bill. It comes through net metering benefits. So for every kilowatt hour that you're using from your solar array, you will get a kilowatt hour of savings on your bill. So every month when you get your bill, you're going to see a negative charge, which is a credit for that solar generation. Because in a sense, you're bringing in solar energy, you're not drawing from the grid. If you bring in solar energy more than what you're using at that particular time, it actually flows back through your meter into the grid, and you'd actually see your meter go in reverse. So that's where you're going to see some of that credit as well. So you end up getting that credit on your bill for that net meter generation. For anything that goes back through the meter, you're getting that credit. And the other, you're not drawing it, so you're not having to get that charge. But anything you're pushing through, you'll get a net meter benefit. The next thing you get are tax credits. We all pay taxes, we're all taxpayers, and you got at the end of the day, you've got a tax bill that you pay on your income taxes. The solar PV actually enjoys a federal income tax credit. This year, 26% of the cost of the system actually can be taken as a credit on your income tax return. So to the extent you had any income taxes that you paid, you can reduce that by 26%. If you end up having less income tax liability than what that is, you can carry that forward into another year and capture it in the next year. So there's right away, you got a nice 26% benefit from reduce of the cost of the system from the federal tax credits. And then the other is the state of Maryland has a clean energy rebate, and you can apply and get that. It's $1,000 for any system under 20 kilowatts. So you get another $1,000 taken off the cost of the system. And then the last opportunity is really in the private market. It's around solar renewable energy credits, or otherwise known as SRECs. And basically, the utilities out there have renewable energy performance standards that they have to meet. They have to generate a certain amount of the electricity from renewable energy. To the extent they do not have the capacity to generate that themselves, they buy that renewable energy on the market. And so a lot of times when you see the clean choice and you're buying into that, in essence, they're buying those that from clean choice in order to meet their renewable energy standards. That's what helps develop a lot of distributed energy solar arrays around the country. But you are your own distributed energy solar array. So if you're generating power, you can actually sell your credits to the utility and they will pay you for them. At present, the market price for those is somewhere between $50 and $70 per megawatt of power produced. That had been $5, but just last year, the state legislature increased the renewable energy standards. That created a greater need for the utilities to buy those credits, and therefore that's what's increased the price. Now, recognize when you sell that renewable energy credit, you no longer sort of own the fact that you've done that for the environment. You've sold that off. PEPCO now gets to call the ability to say they own it, but it's a mathematical way for you to get more benefit out of your solar system. And we'll go into a minute about exactly how those all factor in. So we're going to take an example here. That's my house sitting there. And what is it that this house could produce? So it can produce a 9 kilowatt array. Now, the problem with my house is you can't see it, but all those trees around it actually create quite a bit of shading. Made it not feasible for me to be able to do that. But if that shading wasn't there, this house would be able to do 9 kilowatt of array in that space there. Using a tool, the National Research Energy Labs has a tool out there that allows you to do some basic calculations. Using that tool, 9 kilowatt array would create 12,000 kilowatt hours of solar generation for the year, or 12,000 kilowatts is 12 megawatts. So 12,000 kilowatt hours of generation. That project cost, using the sort of three and a quarter price, would cost just under $30,000 for that to be installed. The net metering benefit, 12,000 kilowatt hours for the solar price of about 12 cents a kilowatt hours, means I'm seeing a benefit of $1,400 a year from kilowatt charges I'm not paying. I'm not paying for that because I'm not drawing it, or I'm contributing to the grid and getting some credit for that. Then there's the investment tax credit. For that array of 2950, 26%, I could see $7,600 of investment tax credit that I would get when I filed my income taxes, $1,000 from the state clean energy rebate, and then if I chose to sell those 12 megawatts of power in the year, I could get between 600 and 850 today in those SRECs. So that's some of the basic math that goes into sort of thinking about your project. I will say that the thing with the SREC market is it changes daily, certainly changes yearly. Today it's maybe $60, $70. Like I said, just 2 years ago it was $5. So one should not count on the SRECs for ever, right? You might want to think, I can get 5 years at that price, maybe another 5 years at a lower price, and wouldn't count on it beyond that. So you want to be, not factor that in on an annual basis. So how can you finance this? So there's a few options to finance. The first one here is thinking about a loan. In other words, you're a homeowner, you want to take out a loan in order to cover the costs of that array, that $29,000 cost. Just in the same way you might, take out a home improvement loan. You take out a loan to cover the cost of the array. When you do that, you really are the owner of the system. You're basically taking out a loan, and you're going to own the system, and you'll pay off the loan in order to cover the cost of the system. When you take out a loan, you'll have regular monthly payments for the loan terms. Those don't fluctuate with energy generation. It's like any other fixed loan that you have, your mortgage or whatever, that you're going to pay a fixed monthly payment over the life of the loan you take, 12 years, 10 years, 15 years. And you'll pay that in a normal basis. But the loan can cover up to 100% of the system costs. So you don't have to come out of pocket for it. You can use the loan to cover all your costs, and then pay off the loan over time. Usually you're going to find the loan comes in two different types. There's usually an offer of a short-term loan, which you can use to cover that 26% of the investment tax credit. It allows you to take that loan, pay it off when you get the tax credit, and do away with and not have any monthly payments associated with that amount of the loan. And then you can have a long-term loan, which basically covers the balance of the system. You can take a long-term loan to cover 100% of it if you don't want to worry about paying it down at the point that you get your return, your tax return. But most people want to have a lower monthly payment. You do that by paying off the tax credit, the tax credit portion of the loan, and leave yourself a lower balance to cover for the rest of the project. And then the last thing that's about these kind of loans, it's not another mortgage on your home. It's not a home equity line that's secured by the home. It's basically secured by the asset, so the array. They'll put what's called a UCC filing on it, so that if you were to stop paying on the loan, basically what they would do is come and take the array. And that's what they own. That's the collateral they're taking. But it does not impact any type of debt on the property. So you don't have to worry about, you don't pay the loan, you lose your house. You don't pay the loan, you lose your solar array. Is pretty much what would happen there. So you own the system after the loan is paid off. You contract with the installer to deliver the system. Basically, you sign a contract. They're going to come out. They're going to deliver the system. You pay them for the fee for the contract, and now you own the system, and you have the loan to pay off. You also then own all responsibility for the system. If it's for maintenance, which you go up and spray it down if you need to. Really, you don't have to. If something were to damage one of the solar arrays, you'd have to have that replaced either under the warranty or after the warranty ends. And you likely take out a small insurance in order to cover that. And then lastly, as I mentioned earlier, if the inverter were to fail, you would have responsibility to replace that. Or an array, a 9 kilowatt array, and an inverter might cost you somewhere around $3,000. That cost is probably 10, 15, maybe even further down the road, but it's a potential cost. So now I'm going to just sort of walk through how does this look in terms of a loan and the financing. So I did apply here having both a short-term and a long-term loan. And what I want to do is show you what the payment structures are and so forth for the short and the long term, and then play out, okay, what does it look like if I own this system for 25 years? How does it play out? So using the example that we had, about a little under $30,000 project cost, just staying with the short-term loan, you'd be able to claim investment tax credits of $7,600. So you basically take out, in this instance, take out a loan for $7,600. You can take out a less, but I'm assuming you're taking out the loan for the entire amount. So you take out a loan for $7,600. The short-term loan doesn't have any current interest, any current payments to it. Basically, you're going to pay it off when you get your tax return, and any interest associated with this is basically just accruing until you pay it off. Those loans generally go out to a maximum of about 18 months. That gives you plenty of time to file your income tax, get your return, and pay off the loan. So that $7,600 loan, if you held it for the full amount of time of 18 months, means your loan would pay off just under $8,000. And that $390 is the accumulated interest that for that loan. This is assuming a 5% note rate for that loan. So you take it out, it's 18 months, you don't have any current payment on it. You pay it off when you get your tax credit refund, and you pay that off at that point. So that loan is done away with, and you didn't have any current payments. Then you take out a loan for the balance. So you have $2,950. Assume you're getting the $1,000 state rebate, so that comes off the top. You're not financing the tax credits since you did that with the short term, so that comes off. So you got about a $20,650 loan that you would sort of take out if you wanted to finance the whole balance of the system. So that's about $190 per month of a payment. This is looking at a 12-year loan. Again, using a 5% note rate. So over the course of the year, you're paying about $2,280 of payments. But you're getting $1,400 of savings, either because you haven't drawn on the grid or you've got credit on your bill from anything that went back through to PEPCO. And then let's assume you sold your SRECs, and I used $50 here per megawatt. You got 12 megawatts, assuming $600 is what you're going to get from that sale of that SRECs, means on an annual basis, you're coming out of pocket for $600 annually to cover that loan of $2,280. So there is a little out of pocket, but after the 12 years are up and the loan is paid off, you get all the benefits. That $1,400 is all coming to you, and you're either not paying it or you're getting the credit. So you begin to accumulate that after the loan is paid off. So that's why it's important to look at the last year, what's the benefits over a 25-year term of the system. So your expenses, you've got $390 that you pay in addition in interest on the short-term loan. You've got $27,360 that you paid on accumulated loan payments for that 12-year loan. But you've got $35,000 in kilowatt-hour savings that you've had over the term. And if you sold the SRECs for 10 years, that's $6,000. So over a 25-year period, you've saved $13,000 compared if you didn't have the system in place. So there's the positive nature. I did not include if you had to replace the inverter in there, that might take, $2,000 to $3,000 off that. And it also does not assume that the kilowatt hour rate changes, right? So if price of electricity goes up, you're actually doing better, right? This assumes the price of electricity is remaining stable over the course of the 25 years, which is unlikely. And so your loan remains stable, but your benefits could increase if the price of electricity goes up, and you get those benefits. So that's how a loan works. The other options for doing this that you could be presented are you could lease it, or the other option is a power purchase agreement. The two are very similar in nature with very small differences between the two. On a lease, both of them have similar features and just a couple different features. For both, you have no out-of-pocket costs. Basically, you don't have to come out of pocket. You don't have to take out a loan. You're just basically executing a lease. So a third-party owner, say the installer, is going to own your array on your roof. And you basically give them the roof. In order to put the array, they lease you the solar array for getting the power generation. it works more like a loan in that you got a very regular monthly payment. It's a lease with a very established payment. It has relates nothing to the power generation from the system. It's just a set payment. Basically, but over the course of a year, the lease payments and the credits you would get from the power generation generally equal out, but in any given month, your lease payment may be higher than what you're seeing as your power credit. So sometimes you'll be out of balance, and other months your lease payment will be less than your power credit. But a lease is a regular monthly payment. It can include an escalator on an annual basis, and it kind of ties a little bit to what their expectation of what utility prices might increase. So your lease payment could increase a little bit each year depending on if there's an escalator on there. The benefits are the array is owned by the third party, not by you. You've got no responsibility for any other aspects. They maintain it. If the inverter fails, they'll pay for the inverter to replace. So you've got no sort of responsibilities for the solar array. It's all the responsibility of the third party. At the end of the lease term, you have an ability to buy the residual value of the array. At that point, the array is degraded by quite a bit, but there's a small value. You pay that value in order to then own the array, or you can just tell them to take the array away, and the array, they would have to take the array off the roof and repair the roof. But there are early termination clauses with these. So if you want the lease, but you decide you don't want the lease, there's usually a termination clause in there that have to make the lesser whole for what they might have as foregone lease payments, and they'll file for the investment tax credit. You don't get it. So if they lose any of that, then there's some payments there. So you got to be cognizant of the fact that you're signing on to a very long-term contract and comfortable with that. The lease can convey from one owner to the next. So if you sell, you can convey the lease. But sometimes so anyway, that can happen. A power purchase agreement works in a very similar way to a lease, except executing a lease, you're executing a contract. The third party owns the array, and you're executing a long-term contract, 10, 20 years or so. But the price of the contract is actually based on the generation of the solar array. So every month, whatever the solar generation that is created, your contract pricing for a particular price per kilowatt hour from the provider. So let's say, they charge you 10 cents a kilowatt hour. Every month, they'll look at what the generation is from the array, 1,000 kilowatt hours times 10 cents per kilowatt hour charge, and they'll send you a bill for $100 that you pay them for that array. So your charge is always related to the generation of the array. So it does fluctuate month to month, but it fluctuates based on the amount of generation from the array. And that's really the only two differences in the two. The power purchase agreement will also often have an escalator. So you start with 10 cents this year, and they may charge you 1% escalation. So next year it goes up by 1% on the kilowatt hour charge. So it can increase over the course of the time. But again, you can execute those and have no out-of-pockets for yourself in order to have the solar on your roof. So this is a simple look at what a solar PPA would look like, or power purchase agreement. A lease would be of a similar nature, but this is on an annual basis. So again, no out-of-pocket dollars for yourself. The project costs the installer $29,250 to do. It generates, let's assume, the same amount of electricity, 12,000 kilowatt hours a year. Your price that you contract with is, let's call it 10 cents. Today, in Pepco, you might be paying 12 cents a kilowatt hour. So this is a discount to what you might be paying. Pay 10 cents, that costs you $1,200 a year in payments. You're getting $1,400 of benefit from not having drawn on the grid or the net metering. So at the end of the year, you're actually, not only didn't you come out of pocket to begin with, you're $200 better off for the year because your payments on the power purchase agreement are less than what your savings are. So that's generally how people want to look at the power purchase agreement. And over a 25-year cycle, you've paid $30,000 of payments on the power purchase agreement. You've gotten $35,000 of savings. So you've actually not only not come out of pocket, you've saved $5,000 over that period of time. The one thing that, this is assuming that if you have an increasing price on your power purchase agreement on an annual basis, that's matched by what the utilities increase would be, which is always what people think is, okay, maybe next year it goes up by 1%, but my utility price probably goes up by 1% as well. So overall, I balance out, and this equation works over the long haul. So those are the basic financing options that are out there and available, the loan or these lease or power purchase agreements. The Green Bank just put out its what we call the Clean Energy Advantage program, which is what we're offering out to the solar installers. We're working with them now to sort of get them to sort of pick it up as one of their financing offerings. And it works very similar to what I was just saying here. It offers the 26% short-term loan. It offers the 74% long-term loan. Again, no debt on the property. And at this point, the loan rates, if it's for best credit, are at 5% for the short-term or the long-term. There are no prepayment penalties. So if you ever chose to want to pay, if you want to pay the short-term loan off 6 months into it, you can do so, and you pay only the interest accrued up to that point. No other penalty applies. Same thing with the long-term loan. If you decide to prepay that at any point, you only pay, if you pay off the outstanding principal, there's no other charges associated with it. There's no financing fees associated with it, so the lender doesn't have any financing fees. There is a GreenBank fee of $200 that because we're standing behind this loan, that's how those rates are below what you would find what this lender would offer in the market if you just went to them straight up. And so that's kind of what we're standing behind. So there's a program fee that helps cover some of our costs, not much. And there's a small application fee. And with any loan that you're going to do, you're always going to pay what's called a UCC filing fee. That's the cost to provide that security on the array. And that's a charge on this loan. It's a charge on any other financing that you might get, because they're always going to take the asset as collateral. And before we end, the one other thing just want to sort of add in here is you're doing solar, which is terrific. That's important. That's a good contribution to yourself and society. But another thing to think about is, there's also other ways to reduce your energy costs if you go about doing some energy efficiency upgrades too, right? You can get an energy audit. It will help you understand what can be done, but there's air sealing, there's insulation that can be done, seal your ductwork. There's a lot of different things you can do to further reduce your environmental footprint, and you'll get more savings from PEPCO. One, you get incentives to cover some of these things, and two, your monthly utility bill will go down by instituting these types of energy efficiency savings. So you can do the solar, come back and do the energy efficiency, and really highly improve the energy performance of your building, your home. So that's, I'm open to take questions. I don't know if there are other questions out there that already been.
Yeah, we had a couple of great questions. One question that I also wanted to have you weigh in on is, are there buyout contingencies or are there additional negotiated lease terms that provide early buyout contingencies where a homeowner could buy out their lease and own the system earlier?
Yeah, that's going to differ by the lease, and I think you have to really look at those and look at the lease terms on that in terms of what the early buyout might be, but many of them will, but you're going to look at what's the fair market value. I think they're going to be very cautious about a buyout in the first 6 years of it, because during that period is when they're taking the investment tax credit benefits. And if they sell before the end of that period, there's a recapture by the IRS. And so that creates a greater cost. But after that, they'll generally give you some sort of buyout provision. But yeah.
Yeah, so after 5 years, it's more likely.
More after 6. They got to get through 5 1/4. So generally after 6, you begin to see that.
Great. Let's see. There's another question about with leases and power purchase agreements, does the array owner keep the SRECs?
No, that's kind of the math that goes into the price that you're going to pay. Is the third party is going to take those tax credits to their benefit. They're going to also take those SRECs to their benefit, and that's what allows them to give you a price below what you might normally pay for either the loan so that's how they give you a discount off your power purchase agreement from 12 cents to 10 cents. Is they're taking those benefits and conveying that back to you in a lower price per kilowatt hour. So you only get those monthly monetary benefits, the difference between what your payment is and what your kilowatt hour. You do get the kilowatt hour savings, that you do get, but you don't get the tax credit or the SREC benefits.
Other questions that folks have, feel free to type them in the chat. You can also raise your hand at the bottom of your menu bar. There's an option to raise your hand and we can call on you and you can ask your question that way. We are being recorded, so your voice will be visible or will be audible on the recording. No questions? You guys are too easy on us. All right.
Nope, we're always here. You can reach us at the, let's see if I can get down to the last slide. So it's on the recording. Nope. I thought I had a contact slide. Maybe I didn't. Oh, it's way back.
Tom, I have a question. What about credit? Like, what is the credit score?
I'm sorry, what is the credit for?
Yes. What kind of credit score would people need to qualify for your loan?
Oh, credit score for the loan.
Yes.
I got you. So what is a credit score that the loan underwriter would look to? So
yes.
Again, we're not, and I'll answer that, but it does make me want to make sure that the Green Bank is not the one making the loan. The lender partner that we have is the one making the loan. And so we stand behind the loan. So any loan that under our program that you would have would be with that lender. That lender will go down to a 640 credit score. And so the loan rate would adjust a little bit. It's about it's not a 5%. I think at the lowest credit score, it's about a 6.5%.
Thank you.
I actually have one other question. Do you know if most people finance, pay out of pocket, or lease? I know it's a personal choice, but just curious if you know the breakdown.
Yeah, so my understanding in talking to, those that in the co-op program in the past, the installers and that we've talked to, that it's about 20 to 30% take out some kind of financing for the program. Maybe they're only taking out a short-term loan and they're financing the rest because they just, they don't want to come out of pocket for that, which would be the tax credit, and they'll just finance that. But 20 to 30% finance some or all of the and that's the historic past, So that's what we understand. And talking to other installers, that feels about right, even in the general market, that about 30, about a third or so take out some financing.
And in terms of the process for applying for this, you work with your solar installer to complete the application and get financing, correct?
So the solar installer would provide the portal through to the lender to make the application there. And the lender will know that this is part of our program and be able to give those preferential rates for that.
Great. All right, another question. Does the PPA or lease options include technology refresh clauses?
It's a good question, and I don't know the answer to that one. I'll have to explore that.
Yeah, that's a great question. Actually, I also have not heard, I also don't know recently about that, but we can find out, Martin, and let you know. Oh, someone has to repeat the question. So the question is, does the PPA or lease option include technology refresh clauses? So I think the question is, if solar technology changes a lot over the next 20 or 30 years, are there options for people to, upgrade their system as part of their lease? So we will find out and get back to folks. All right.
Any others?
Well, one question I had is, if I really want to go solar, how could I do that and get help if I live in Montgomery County? So maybe Kimberly, you want to explain about the co-op?
Great question, Emily. So what you would do is go on our website, Solar United Neighbors, sign up, become a member. We'll help you walk through it. There's several ways you can get in contact with us. You can go on our website. We have a Facebook group you can join. We have a listserv you can join, as well as Twitter and LinkedIn. So there are several ways that you can get in contact with us, and we look forward to working with you. And Tom, I want to say this was a very great presentation, a lot of good information. So thank you for this.
And the solar co-op is open through the end of the summer, but we encourage you to sign up now. The group is going to be meeting and selecting a single contractor to do all the installs for the group. And so the group will get great terms, because we're buying in bulk as a group instead of everyone going individually. So you can sign up on our website. I put the link in the chat, and doesn't cost anything to join. If you change your mind later on, you're always welcome to leave the group. But if you're thinking about solar, it's a great way to get the information, meet with a contractor, and you get support throughout the process. Solar United Neighbors, we are a nonprofit. We're consumer advocates, and our goal is to help you learn about solar and answer any and all questions you might have about putting solar on your home.
And just to add what Emily said, we have several solar info sessions coming up. So if you go on our Facebook page or website, you'll find those dates. And I encourage everyone that is interested to join us, and you'll get a lot more information on how the co-op works and what it is that we exactly do.
Yeah, and we also have an electric vehicle expert as an attendee. So if anyone has electric vehicle questions, we're also happy to field those too.
Okay.
Great.
Any more questions? See anything more?
I think that's a wrap. So.
Okay. Well, thanks for letting me participate, and I hope everybody moves forward with your commitment or your interest. I guess you haven't committed, you're signed up, but hopefully your interest will translate into sort of you getting your solar PV on your home. Thank you.
Looking forward to them.
Yeah. Thanks, everybody.
Thank you.
See you all later.
Have a good evening.
Bye.
Bye.
Don't forget to share this recording with others who missed out.
Yes, definitely.
Shame.
Shame.
Bye.
Have a good evening.